So as I land this plane, I'm going to touch on nonprofit tax compliance provisions within the bill. What it does is it authorizes the Treasury to revoke nonprofit tax-exempt status for organizations found to indirectly support terrorism or violate federal funding rules. So why does this matter? Foundations and charitable arms of businesses are going to be facing an elevated level of scrutiny. So who you are doing business with is going to matter a lot during this time as we navigate this new provision. And experts are saying that legal advisors are going to need to stress the need for new risk protocols. So you're going to have to look at who you are doing business with, especially if it's on a global scale, as a new risk that needs to be discussed at the highest levels of your leadership, because that's where, some of the key risk, environmental risks, need to be analyzed and understood. Who you're doing business with and who they're doing business with is going to matter even more during these times, and how terrorism is defined is going to matter a lot during these times. So what's the strategy here? One strategy could be for you to conduct, if you're a nonprofit organization, to conduct an annual audit of your nonprofit partners. Again, who you're doing business with and who they're doing business with. And the other part to this particular strategy would be to strengthen your grant oversight and governance procedures. I've worked with nonprofit organizations that struggle with grant oversight because it can be a beast to keep track of all of the different things that you need to understand with respect to your grants. And so it's going to be very critical for you to have redundancies perhaps built into your grant oversight procedures to ensure that you are vigilant about who you're doing business with and how it's perceived, and whether or not it could be perceived as you supporting a terrorist organization or supporting terrorism.